Hey, Renter Retires, it's Adam Schroeder here with another episode, joined as usual by the founder and CEO of Renter Retirement, Zach Lemaster. And we have a treat for you today, and that is no other guest, because we are going to be talking about some of the markets that we're in and why on earth we decided to pick them and why on earth you might be thinking that it's a good place for you to go. So, Zach, I know you wanted to start, so take it away.
All right, everyone, let's dive right into it. Renter Retirement scours the nation to find the best investment markets across the country. There's a lot of different metrics we look at when we determine what makes a viable investment market. We obviously want to be in areas that have population and economic growth, that have a diversity of industries. We want to see areas that have a booming economy where rent prices are increasing year over year, and we're also seeing rental demand continue to increase. So these are all important factors when considering a market to ensure that you're going to have success as a landlord, owning a property that will increase in value over time, that will increase in cash flow, and that really hold true to all the metrics that we've seen time and time again to be a successful investment market, regardless of what else is going on in the country. And so we're going to highlight the top 4 investment markets that you have to be aware of right now, and you absolutely need to consider if you're looking to build consistent income and grow your net worth over time through real estate investing. So the number one market we're going to talk about today is Birmingham, Alabama. So this smack dab in Alabama. We love Alabama because we know it's a landlord-friendly state. It has low taxes for property taxes as well as income. It also is a state that has a booming economy, specifically in key areas. Birmingham is no exception to this. Birmingham is an area we've been investing for a long time, but this is an area that stays true to real estate fundamentals where you can still have positive cash flow, but you also see high demand in the Southeast where a big portion of the population is moving. Just to run through some statistics, specifically Birmingham is a market where we can still access new construction properties below the median house price point. We know that the U.S., the median house price point is around $400,000, and we try to be below that because it means there's more affordability. We know there's an affordability crisis in the U.S. right now. Anytime we can be below that $400,000 price point, we know that there's going to be more people searching for those specific areas for housing solutions. So the average median house price point in Birmingham is just under $300,000. This means that you can acquire a brand new construction asset below $300,000 that's still going to provide positive cash flow for you. Another metric that we look at is homeowner to occupancy. And this is true of a market as a whole, but also on a microeconomic scale, looking at specific markets to ensure that you have a good balance of home ownership versus renter is actually a positive thing if we see more home owners versus renters, because that's a more desirable place for people to live. So Birmingham as a whole has a 63% homeowner to rental comparison. And so we know that many people are actually owning houses in Birmingham. This means there's a smaller pool of renters, and these are more attractive places for people to live. But some of the other economic stats that are very exciting to us that stand out is that we've actually seen income increase at 21% in Birmingham over the past 5 years. There's a lot of industries, including manufacturing, tech, government, that are coming into Birmingham and really creating a significant amount of jobs. Job growth is actually up 14% in 2023. Rent growth is up 28% over the past 4 years. And so this means that there's people moving to this area, that there's high rental demand. We see on average that the homes that we invest in Birmingham are increasing rents on average about 5 to 6% per year. So this is a great market where you can invest in a brand new construction property well below the median house price point, below that $300,000 point, as well as, we have some rehab houses that are even in that $120,000 to $150,000 range. But Birmingham is a great area where you can get an affordable house that cash flows well, and you are well positioned for growth over time. So I'm going to bring in my colleague Adam to talk about the next investment market you must know about today.
All right, thanks, Zach. The one that I want to dive into, we're looking at markets today. I want to talk about Akron, Ohio, someplace that most people hear about, and they're like, where is that? Who is that? Why is that? One of the big things that I love about Akron, Ohio, is that it's nice and solid. You may not have heard about it very much, except maybe being the home of LeBron James, but it is a city of 200,000 people. That is a solid place to start at the very beginning. But let's also talk about the fact that it has some serious appreciation besides having some good cash flow. We're looking at a place that is averaging 5% appreciation per year over the last 6-7 years. So we are seeing that consistent growth in home prices. We're also seeing rent growth. The rent growth in this area is averaging about 7.5% a year as you look over. So you've got a market of 200,000 people. There's a 63% home ownership rate, which means you've got a decent amount of renters, but you've got some good home ownership that'll continue that appreciation. But your renters every year are bringing you 7% extra year over year over the last 3 or 4 years. And you say, well, how can that be possible? Well, it's possible because we're talking about people who are consistently getting pay raises. We're talking about over the last 10 years, they've been averaging about 2.5 to 3% growth in wages every single year. Now, that 7% rent growth has been happening for a little while, but it wasn't happening before. It is now because people are moving there, because home prices are actually affordable. Now, we don't have new construction here, but we do have a consistent volume of rehab properties, and those properties range anywhere from $130,000 to $180,000. Now, I challenge anybody to find a market that will actually cash flow, where properties in places that people want to live. We're talking about good, solid B neighborhoods. We're renting to teachers, we're renting to janitors, we're renting to construction workers, all of those solid families who are going to stay there long term. And we're buying that house for, let's just call it $140,000, $150,000 on average. That is a solid place to be investing, especially when you've got the full team there. You're in a growing market. We're talking about significant appreciation long-term so that you can sell and use that 1031 money and have good rental growth throughout the entire time. So that's enough for me. I'm going to kick it back to Zach for our next market.
Thanks, Adam. The third market that we have to look at today and where we've seen extreme success is an area called Poinciana, Florida. And you may not have heard of this market as many of the ones we talk about, but these are what we call sometimes sleeper markets, where you don't hear it. Sometimes when you hear about them, it's too late to invest in them, right? We want to be in areas where they're on that projected growth path before it's a commonly known area. But Poinciana specifically is an area that is a sub-market close to a very large metro market that we are all familiar of, which is Orlando. So Poinciana and generally Polk County, which is just southwest of Orlando, this is an area where we see a lot of families moving because of affordability issues. So anytime, again, we can be in a submarket that is adjacent to a large metropolitan area where cost of living is a fraction of the cost, real estate is a fraction of the cost, it means there's a lot of growth opportunity because people will move from more expensive markets to surrounding suburbs, especially as their family is growing and they're looking for more affordability. So Poinciana is an area that you absolutely have to look at, and an area that we specifically focus on new construction because we know, again, in the Southeast, there's just a ton of population growth. Poinciana is an area where we can be below that median house price point, average around $280,000. Rents are still above $2,000 on average, which means there's a high propensity for cash flow in this area, but it's a growing area where you can still commute to Orlando in less than half an hour, but live in a place that is more family-oriented and the cost of living is significantly less. Because of this demand, we've seen that rents have increased on average about 30% over the past 3 years. That is huge. There's been a lot of fluctuation in rents in different parts of the country, especially because of the affordability issue. But Poinciana has been so affordable that it has a lot of upward trajectory and room to still increase rents where we can capitalize on the cash flow of those properties. And there's a lot of income and jobs being added to this area. We've seen an increase over just the past year of 11% in the average wage for Poinciana and Polk County. So this is an area that definitely needs to be on your radar. The population is increasing over 3% per year. And once again, this is an area where many people own homes instead of renting. We have 61% homeowners versus renters in this area. So this is an area where you see families that are wanting to stay here and live in this area because they like where they're at for a long period of time. And that also means there's a shortage of housing solutions for renters. These are all the key metrics that we love. We know that Florida is a landlord-friendly state. There's no state income tax. Property taxes are still affordable. So this is an area where you can come in, you can get a brand new construction house under $300,000. You can cash flow well, and you're well positioned for high single or double-digit increases in market value and rents year after year. Absolutely a market you must check out.
All right, and my last one is we're going to look at the Dunwoody-Joplin area. And this is an area where, you talk about sleeper markets. I'm talking about a population of 75,000 that oftentimes people have never really heard of. But whenever you look at the stats of it, it's pretty incredible. We are talking about a place where we are getting new construction properties for the low $200,000 price point. And when I say low 200,000, I'm talking 210, 220, 230. And these are places where maybe you haven't heard of it. Maybe it's only 75,000 people, but it's growing at 1% a year in population. A 1% growth in population is pretty significant whenever you look at it over the long haul. And then you say, well, Adam, if it's 75,000 people, what other great economic factors are there? Well, let me tell you this. Since 2018, they have averaged 11.6% appreciation per year. 11.6% per year since 2018 in the Dunwoody-Joplin area. We're also looking at a rental income growth of over 2.5% over the last 10 years. That is a 25% pay raise the people in this area have received over the past 10 years. 25%. That is a significant growth. That is something that will make every landlord happy. So you've got people moving there. You're in Missouri, which is a landlord-friendly state. You've got pretty low property taxes, usually under 1%. And you've had rent growth in the last 4 years of 30%. So I'm talking to you about an area with, new construction, low 200,000s. You've got 11% appreciation. You've got potentially 7.5% rental increases. I'm talking about a place where you definitely want to be checking out because it is off the beaten path. It is not somewhere that you've got all the major media telling you you've got to look at it. So take a peek at this market and see if it makes sense for you.
All right, everyone, there you have it. So if you are having problems trying to identify a good investment market, these are some of the top markets that we're seeing success in today, areas that we're personally investing and that we know are well positioned to be in strong investment markets for many, many years. The U.S. is a very diverse place, and Rent to Retirement specifically focuses on identifying the best markets across the country, weighing all these important factors that you need to really understand to be a successful long-term real estate investor. And when you hear about new construction prices in the low 200,000s, I mean, that is a down payment in most parts of the country. So even if you have limited capital, these are markets where you can still make an exceptional investment. And the best part is we have some exceptional financing options where lenders will finance you 95% of the home purchase price. That is unheard of in today's world. So that means that you can buy properties with as little as 5% down. We have builders that are buying rates down into the 4% range. And there's just a ton of exciting investment opportunities. So if you're a struggling investor and you're trying to learn how to get started or scale and diversify your portfolio, reach out to the Rent to Retirement team. Let us help you and be your guide to both identify the best investment markets across the country, the best financing options, and help give you a roadmap on what you need to do to be successful long-term. All right, everyone, I hope that has been educational for you, and we hope to speak with you soon.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.